Are you actually profitable or just making sales? If you're relying on your Stripe dashboard to answer that question, there's a good chance you're getting a false sense of financial security. I have reviewed hundreds of online business and agency QuickBooks files, and I can tell you, Stripe is great for collecting payments, but it is not built to tell you the truth about your profit. Today, I will show you the 3 signs your Stripe reports are lying to you and how QuickBooks can reveal the real story. If I've not had the pleasure to meet you, I'm Bridget from Vector Financial, and we guide small business owners through what their tax preparer didn't explain, what the IRS doesn't tell them, and what YouTube can't fix, so you can finally feel peace of mind, clarity, and financial confidence. Let's dive into the 3 biggest red flags I see when Stripe numbers don't tell the whole story. Sign number 1 is that the numbers in Stripe don't match what is inside QuickBooks. Stripe deposits money into your bank account in batches. So for example, let's say that you make 3 sales today and 2 tomorrow. Stripe might lump these together into one payout that comes a few days later. In QuickBooks, each sale is going to be recorded and matched to that bank deposit. So if you've ever pulled up your QuickBooks profit and loss report and thought to yourself, that's not the same number Stripe says I made, you're not imagining it. Stripe's total sales figure is before all of your fees, your refunds, or timing differences, while QuickBooks is often pulling from bank deposits unless you have the right integration and mapping set up. Sign number 2 is that the fees are eating your profit. So Stripe takes their processing fees out before sending you your payout. So they get paid before you get paid. On the Stripe dashboard, you are going to see gross sales and you are going to see net after fees. But if you're not tracking those fees as a separate expense inside of QuickBooks, your profit margins are going to look higher than they really are. Let's put this into an example. So Stripe shows that you had $10,000 in gross sales, but QuickBooks is recording a $9,700 deposit as sales. That missing $300, it is a real expense that you're not accounting for, which means that your books are overstating profit. This can also mean that you are underreporting income or expenses when tax time comes around. And sign number 3 is that your refunds and chargebacks are hidden inside of your payouts. So Stripe will automatically deduct refunds or chargebacks from your payouts, sometimes without a clear alert to you. Inside QuickBooks, if those refunds aren't recorded as negative sales or returns, your revenue is going to look higher than it actually is. Not only will this skew your cash flow projection, it could also cause you to spend money that you don't really have. This is also a great metrics to be tracking so that you know how much is being returned for any sort of refund request or chargeback. If you're not recording that in QuickBooks, you don't have that data. The fix is to make sure that every refund or chargeback is recorded properly in QuickBooks so that your sales and expenses can tell the real story. You may be saying, I've been getting along just fine, so why does this really make a difference? I can promise that this matters for your profitability and your ability to make decisions off from real data. Without knowing how much you're paying in fees or how much is really a refund or a chargeback, you don't have the information that you need. And I can tell you that we have seen clients neglect to account for the increasing cost of processing fees, and it results in them undercharging. As processing fees increase, you need to be looking at your pricing. And that's just one of the many ways that this impacts you, your business, and your decision making. But here's the bottom line. Stripe is great for processing payments, but QuickBooks is what shows you your true financial reality. So the real question that you should be asking yourself is not how much did I sell, but it's really how much did I actually keep? When you sync Stripe properly with QuickBooks and reconcile your accounts monthly, you are able to finally see your real revenue after fees, your actual profit margins, and most importantly, which products or campaigns are truly worth scaling. You may find what you thought was your biggest revenue producer is not so much. And that might cause you to think about what product you're advertising or what service you are honing in on to bring clients in for. So if you're ever cash confused or your Stripe numbers never seem to match QuickBooks, here is your next step. I want you to grab our free checklist. We have outlined the 9 costly QuickBooks mistakes so that you can fix your hidden errors now. If you aren't using QuickBooks, we have a QuickBooks readiness quiz, and I would love for you to take that to find out if you are ready to get yourself into accurate reporting so you can scale that business. And if you are using QuickBooks, as always, we have our health checkup. Just like you shouldn't neglect that check engine light on your car, you should not neglect the check engine light on your QuickBooks. And you should always have a professional review it at least once a year. Inside that health checkup, we would uncover Stripe syncing issues, show you where your money leaks are, and give you a quick fix-it game plan. So you're doing amazing things in your business, amazing things for your clients. You're working hard to bring in sales. So let's just make sure that you are keeping as much of your money as possible and paying yourself what you deserve. I'm Bridget from Vector Financial, and I want you to subscribe for more real talk financial tips that give you peace of mind, clarity, and cash confidence. I will see you in our next video.